Good morning, everyone. Welcome to our Friday morning trading session. Of course, it's the Friday before the Labor Day long weekend, so the market's probably going to try to get a lot done today, or maybe they already did get a lot done. There was a jobs report about an hour before the market opened, and it looked like that's had a pretty positive result because the report or pre-report, everything was relatively quiet. You can see not very much going on here during the London session. And then once the jobs report hit the floor, got a big rally out of the market. So I guess we're going to have to wait and see whether or not that was actually the move of the day pre-market, or whether they're going to continue higher from here, or whether they're actually going to try to fill that rather substantial opening gap. Right? The market left off down here around the 47.80-ish mark, and then opened way up here around 48. So a big 20-point gap down here. No real signals out of the gate, everything coming pre-market. So we may have to sit here for a few minutes. And let's see, also a gap up in crude oil. Not nearly as substantial as the stock market gap, but gap all the same. So crude oil leaving off down here yesterday around the 43.10, 43.20 mark, and opening, crude oil opens at 6 a.m. Pacific, 9 a.m. Eastern, and so they left off down here, opened up here, so there's a little bit of an opening gap here. Crude oil looking much stronger today after 3 days of being in a bit of a tailspin. Well, actually 4 or 5 days being in a tailspin. Could be a little bit of profit taking. We shall see. This was a trend change signal, by the way, and a red bar buy signal. You could treat this as your signal bar, looking at it from a second push point of view. Now let me explain the second push entry. Sometimes when you're looking at a formation and you're not entirely sure what the market is doing, for instance, here the market is clearly in a downtrend, right? It's pretty obvious the market's in the downtrend. We get a green bar sell signal. It's with trend. Okay, let's go ahead and sell it. But here, we're not really sure what's going on, are we? The market could be sideways. It could be reversing. So what do we do? Because we know it's a high probability signal. It's a hard edge bounce after all. But do we just blindly buy it? Well, I suppose you could, providing you could afford to cover the trade way down here, which is a long ways away in a market like crude. So what else can you do? Well, we could wait for the ATR to flip over. That would make it a little bit more predictable, in which case this now becomes our signal bar. However, we still have a relatively unusual situation here. We don't know whether the market's going to get held up on the highs here, right? So still to cover the trade here is kind of tight. We still want to try to cover the trade a little bit further away, and that's still out of reach. Our last option is to take advantage of what I refer to as a second push entry. All a second push entry means is we allow the signal to engage, and then we allow the market to show us the limit of the signal. The problem with the second push entry signal, or using a second push to enter, is that occasionally the market will run away and not give you that second push. So for instance, here was a sell signal. The market never really looked back, just kept going. But you could make a case that given the highs that are here, that maybe a second push entry is the way to go. So we allow the signal to engage, we allow the market to essentially top out at this point. Now we know this bar right here shows us the limit of the buying. Looks like it topped out at 44.17. Therefore, if it ticks 44.18, we could look to buy it. Well, with the other high right there, I'd probably give it a couple extra ticks. And what this allows me to do is I can actually cover the trade. Good old crude oil. I can actually cover the trade a little bit tighter still, because I'm looking at renewed momentum to bring me into this market. Right? I'm not going to get filled until we break out above the high. Now, what I would normally do here is I would ignore that swing and I would buy at 44.19. One tick above the high of that bar. And the reason I would do that is I would, at this point, I would assume if the market continues higher, the buyers are in control because I'm making higher lows, right? Everywhere through here, I'm making higher lows. Well, in an uptrending market, the lows are more important than the highs, right? It's like that little trading expression, a bull market knows no resistance and a bear market knows no support. Now this one's actually out of reach as far as my risk parameters go. However, let's demo it anyhow. And see if we get any follow through on that. Now ideally I'd like to put my stops even deeper, perhaps below this swing. All right, so that's good. They didn't slip us. So now they're fighting with the high right here at 44.23. We should be able to see them push through there. There will be some selling associated with it. After all, sellers sold there before. But if we can see it tick 44.24, 25, we're probably going to get a little bit more follow through on that. Come on, get up there. Oh, look at that. They are stuck. Did they get to 44? Oh, they got as high as 44.26. So they did engage some of the exit orders of the sellers from here, and certainly some of the sellers from here. Come on, let's go. Let's go. We'll try to protect a little bit more open profit here. As the market goes up to hit our break even. All right, well, we'll revisit that. It looks like the market's kind of floundering a little bit. We'll put that on the shelf for now. Let it perk away. And get back to the action here on the NASDAQ, which I don't seem to be having very much of. Whenever you see the market make a really strong rally, pardon me, even though it's so very tempting to think reversal, more likely than not is that the market's going to end up going sideways. That's what markets do. They go up, or okay, first they go sideways. Then they go up or down. Then they go sideways. Then they tend to go up one more time. Then they go sideways. Then they go down. And you guessed it, they tend to go sideways. And then they'll go down some more. And then they'll go sideways. Now, of course, they don't follow this pattern to the letter, but it is a more or less accepted trading pattern. Peter's asking regarding the ultimate support and resistance suite, at what time do you set your start? I believe it's the same as your computer clock. It should be set to go off Eastern time. I've actually never changed any of the settings. I just run with the defaults. So let's see here. The lines recalculate at 2200. That's 9 p.m. my time, and that's midnight Eastern. So that's when I want them to calculate, at midnight Eastern. Peter, you're down under in Sydney. Yes, set them for New York time. So you've got the custom offset. If you have difficulty with this, I'm sorry to say, I don't know exactly how Ben set this, but what you're shooting for is you're looking to have your first bar print around midnight New York time. And you can see from my display, it's not exactly midnight. It's like quarter after that that first bar prints. because that's just how long it takes. Now, I'm going to shoot you Ben's email in case you have any more questions or difficulty with that. That's going to be support@indicatorwarehouse.com. All right, so we're getting a little bit of a rally up here. Oh, we did get a little bit of a first micro macro cross. Steve, you're obviously not a hunt and peck typist. Steve writes, good morning, Big E. I like that. I've had that before. As I love listening to you, and I also trade the NQ, now it's a new month, and I've gone over July and August. I was profitable, but not enough, and have not taken enough trades. Can we/you maybe work a little more on the signals and a little less on the training? Actually, this would be easier for you. Well, yeah, it might. And of course, on Wednesday, I know it's more teaching. What do you think? And when you have a signal, can you draw an arrow on the chart? Thanks, Steve. Yeah, that's always been an issue with the room, of course, because it's not just a trade call room. As one of our DTS owners so eloquently put it, you know, I appreciate you pointing out the trades, but heaven forbid you get hit by a bus. What do I do then? So it's always been a bit of a balancing act to try to teach the owners, especially new owners, those of you who have been in the room for a while already, I think are pretty familiar with your tools. But it's been a bit of a balancing act to try to balance off the trading with the trade calls, because I know that many of you like to try to mirror my trades, or at least take a little comfort in taking the same trade that I might be taking. I will endeavor to point out the better looking trades to you. Remember though that trading is not about frequency, right? It's not the kind of thing that we need to trade more. We just need to trade more volume, but make sure we're doing it accurately. Yeah, Steve says, you know, you could put up a survey and let everyone vote on it. The fellow to express your opinion to is Adam. And this is for people on both sides of the equation. Those of you who, you know, like to see it the way it is, or whether you'd rather have it more of a trade call room format. Adam is the fellow to send the email to, and that would be adam@indicatorwarehouse.com. Adam's the one who finally makes the decision on these types of things. Darcy asking, how do I get my candles to show the volume like yours? That's actually the equivolume charting, Darcy, and that is one of these system add-ons or standalone. If you have the equivolume charting, what you need to do is you go here to your data series, and where it says chart style, and it says candlestick, you're going to see you have the option for the IW dynamic equivolume bars. All right, we're working a couple first micro macro crosses here. I'm a little slow getting in because, as I mentioned, I'm concerned that perhaps the market is topping. By the way, if you're in that crude oil trade, I'd probably recommend taking that trade to break even now. We came up just short of our break even trigger. See that? By one tick. So I'm forcing the trade to break even anyhow. Or just take the money. There's $170, $180 sitting there. You can always just take the money. I don't feel like giving too much back on that trade. All right, so we do have a first micro macro cross signal here. I would probably refrain my entry until there. Let it take out the high. Oh, they slipped us too, the stinkers. Slipped me a tick. Oop, let's get that back. 2 ticks. Come on, get up there. As you can see, by taking that slip, it was also a little bit thin to get that 2-point slip. Come on, give me one more bar. Give me one more bar and I can start to play with my stops a little bit. One more bar higher. Let's be specific. There we go. All right, I'll enable the stops. I can always pull them back if I see the market retreating, but oh, look at that. They're stalling already. Now, of course, by delaying my entry, those extra ticks, I'm making the market work just a little bit harder to try to get to my profit objective. just about to tap us on that eagle trade. The buyer's stepping out as we get near 44.50. All right, we're going to set this back and see if there's anything else. No, not yet. So we did get the break-even plus 10 tick stop out on crude oil, and we're almost to the break-even trigger here on our hawk trade. You can see, according to the day ranger here, we've just blown away yesterday's, well, not yesterday's range, sorry, yesterday's range was quite big, 183 ticks, but the averages are all hovering around 125, as high as 140 on the 10-day range. That's odd. Had a couple weeks ago, obviously, a little bit of extra activity. Here come the sellers now. See, had I taken the trade right on the hash mark, we would have hit the profit objective. It's just making it work a little extra by bringing me in above the high. Unfortunately, then I got slipped a couple ticks, so that put that profit target a little bit further away as well. Oh, Steve was asking about the arrows. Let's see if I can remember to do that. There we go. This is where we're long from, right there. All right, last chance for the buyers to get their act together. I don't know if I would count that as a 4-arrow consolidation. All right, let me get those stops going a little faster. Well, there you go. I didn't need to worry about it. I got up there and finally found my profit target anyhow. Hooray! Hooray for us! Stephen says maybe a long arrow would be easier to see. Is that one? Does that one work for you? That's about as big an arrow as I can draw. All right, so a little bit of a breakout. I don't think we're the only ones wondering whether the market's going to be consolidating. You know, in hindsight, the rally doesn't look like that much. Oh, well, no, sorry, I'll take that back. That is a pretty big rally. 1, 2, 3 zones eventually. Yeah. Now, a lot of times when the market is pushing like this, we'll see it move, about, especially here on the Eagle, we'll see 2 or 3 prominent legs to the move. So here, I suppose you could count that as leg number 1, as we had a little bit of a retrace here. So currently we're working on leg number 2. With the Eagle, we rarely get more than 2 legs, although on some occasion we will get a third. But they tend to get a little bit smaller. You can almost see the momentum draining out of the market. And then we'll get a little bit of a more dominant move lower, and then we'll finally get our test of the extreme, and then the whole process will begin over. Now, how long it takes for all these to develop, well, that always changes. Sometimes it can all happen within a session, and other times it can be days. And within each session, you also get those types of moves as well. So here would be leg 1. There's leg 2. There was very little time spent going sideways here before the market began reversing. I suppose you could count that as leg 1. I try not to micromanage these kinds of things. That would make that leg 2. So here's the reversal again. This is leg 1, leg 2. So transfer that to where we are now. I suppose that could be leg 1. Maybe that's sideways. There's leg 2. We're working on leg 3. I certainly wouldn't argue with you if you saw it that way. But the markets tend to see things from a daily perspective as well. They don't always consider the overnight. All right. Anything else going on? No, not really. Here's soybeans on the Eagle. A little bit of an uptrend. kind of choppy yesterday, really. And this is Wednesday. Decent move lower. However, they do seem to be struggling just a little bit. The forecast for the soybean market actually very bearish. All right, so are they going to top out here? We're getting a little bit of a reaction. The market trying to continue higher, but we're getting a lot of overlap. See, we're starting to trade a little bit more sideways. Not so noticeable here on the Eagle, but definitely on the Hawk, the Falcon, and the Raptor. It looks as though we're getting a little bit of sideways drift. You know, you can play the connect the dot game too, but where people normally draw trend lines across the bottom of a chart in an uptrend, try drawing a trend line across the highs in an uptrend. And you'll immediately see when the market starts to flatten out. Okay, I'm suspecting we may get a soft edge sell signal here, which would be the reversal signal on the Raptor. The Raptor and the Hawk are going to be two of the faster tools to spot that reversal, if in fact we are getting a reversal. Oh yeah, we're getting a reversal. All right, there's a soft, this is a sell signal, but it's not a soft edge sell on the Raptor because a soft edge sell must always be preceded by a retest of the high. Now you could, I suppose, make a case that this was a retest of the high here. The market tried to break out, it failed, therefore I'll start shorting here. I think I like the Hawk setup a little bit better. You can see we're producing a red bar buy signal. There should be an opportunity here to buy the market up as it tries to retest the high. However, I might be a little bit more comfortable trying to short it lower. Short the failure, pardon me. If this breaks down now, we should see the market continue lower. In which case, we're going to get our fill right here. Oop, wrong way. on, on the very next bar. Oh, no, I guess one more bar. I'll take 2 bars. Come on, take out that low. Take out that low, you stinkers. Get down there. That could see the market actually push back to this morning's open. Let's see if we've got a sell signal here on the Raptor yet. Not yet. Working a possible trend change signal here on the Falcon. So the Falcon trend line change. We've got the down. We've got the trend line changing color. Here's the up. Here's the down coming back. We just have the warning dot. I can anticipate we're going to get a signal here below the low. If it breaks down. Okay, so it was retreating, almost had a green bar sell signal. Yeah, I believe you're right, Stephen. Stephen says we had major resistance here around the 48.16 area. Market just poked through. Sellers decided to beat up on them a little bit. So we're getting our retest. We'll see here on the Raptor now whether we get that soft edge sell signal coming back. I would consider this to be a retest. And if we get the subsequent failure, the sell signal, I'll punch in with a sell order. Get my stops ready. Oh, I'm so looking forward to this holiday weekend. Oh my goodness, I love every weekend, but this holiday weekend, I don't know, it's been a tough month. August was hard on me. All right, so here comes the sell signal. We've got the warning dot. Here's the sell signal, and there we go. We engaged the signal. Let's get some follow through now. Let's see, I better make sure I got stops in play on the rest of my positions. Note here that the failure of the red bar buy pretty much coincides with the printing of the first micro macro cross lower. This happens a lot. That's why I tell you, you don't necessarily need excuse me, you don't necessarily need to jump on board with these red bar buy failures, the green bar sell failures. See, here was a green bar sell back here. And so we bought the failure, but look at where the first micro macro cross printed. Pretty much in the same neighborhood. So here we've got the red bar buy signal and the failure. Well, this first micro macro cross since drifted into yellow bars, but you get my point. When the first micro macro cross lower does print, it should be pretty much in the same neighborhood as the failure of the red bar buy. My stop strategy rolling just a little bit too quickly for me here in the rafter. That's why I turned that off, held it back. This, a break above the high, there I know I'm definitely wrong. A break of the little itty bitty swing high, not so much. And of course, this is a counter trend trade. Therefore, you need to give the market a little bit of time to turn. As much as we all love to see the market make a straight line to our profit target, that's rarely the case. Come on down. Get back below that little swing low. That's what we're dealing with right now. That's where the buyers hopped on before when the market tried to sell off. Doggone it, and they're doing it again. Come on. We should get a little bit of a push here to the downside if we can see them trade. So the low's 48.08. We need to see 48.07 and 3/4. Come on. got a quick little hit at 48.07 and 3/4. They just kissed it again. Come on. Get down there, you scoundrels, you. You know you want to. Let's go. There we go. There's 48.07 3/4. I think we even saw 48.07 half on that one. Yes, we did. Wow, the Geiger counter really fighting it going lower. There's some serious buying going on down here. Okay, now I'm starting to think about rolling my stop in a little bit tighter. Not quite the follow through I was anticipating when they broke down below this 48.08 area. We should have seen a little bit more of a bearish reaction. I'm going to do my best to be patient with this trade. If you're being anxious around, you could bring it in above the opening range high around 48.15 quarter, 15 half. All right, I'm going to go with a tighter stop. We'll let the trade manager bring us in. I'm not liking how the market is floundering. We should have seen some follow through. We did not get it. Wow, just stuck. Well, the market doesn't get too much more neutral than this. I was thinking a retrace here to the hard edge. That was my objective. Or perhaps even the low of the morning. We're finally getting around to producing a first micro macro. Oh no, sorry, pardon me. First micro macro cross was right here. It engaged. And you can see again it was pretty much in the same neighborhood as the failure of the red bar buy. And that's where we sold here, and this is where we sold here. Did everybody go home? It's only been an hour since the open, but like I said, I guess 2 hours if you count the pre-market report. All right. Again, the sellers. This is now the last chance for the sellers. If they fail to take the market now below this 4808 area one more time and stay below here, we're going to have effectively a triple bottom. And that's going to be good enough reason to take an early stop out. Come on, get below there now. Let's go. One more push. Don't make me bring out the mouse. Oh, they just keep kissing it. Oh, come on. Oh, wow. I don't believe it. I really don't. Look at this, right to the number, practically, right to the number. Tony says, screw it, bring out the mouse. Here we go. All right, let's go with the mouse. Let's pull it down. Yeah, Stephen writes, let me go start a load of laundry and make my bed. I can't take this. I know, it's painful today. Here we go. The mouse, I'll pull it down. Don't worry, guys and girls. We'll bring it down here. Come on. We should at least see the hard edge, which would put us somewhere around 4804, 4803. I do believe we have a support line in that vicinity. Yes, we do. 4801 and 3/4, so essentially 4802. Well, they're making us earn this one, aren't they? Just kind of hanging around our order. Well, another rejection off the low. There's just too much sideways trading. See? We have all these yellow bars, all this overlap in pricing. I suppose you could even see it like this, like a little bit of a triangle. What they would refer to as an expanding triangle, or at least a little bit of an expanding triangle. I know you can also draw it like this. Yeah, I agree, Tony. Tony says when it finally moves, it should be a good one, and hopefully it's in favor of those of us who are short the market. A lot of times when the market's doing this, it does kind of build up a little bit of energy, if you will, and then finally make a move. Everybody's kind of going sideways today, and I suppose it is because of the Labor Day holiday. Soybeans, non-committal. Crude oil retraced somewhat, but hasn't really done much for the last little while, just kind of range bound also, trading higher, trading lower. All right, here come the bulls again, trying to push the market back up as this support is so sticky. Remember that number, 4808, that's going to be a number to contend with next week. Tony says, regarding beans, I shoot with a big bean farmer, and he says that the crop in Kansas will be really good this year. However, he sold some of his beans at the beginning of the week and was disappointed at the price he was able to get. Yeah, from what I understand, the inventories are up from not only is it a good crop coming in, but there's still lots of inventory left over. So nobody's really expecting a rally in the bean market this year. So if you're looking at soybeans from a longer perspective, while we're just waiting for something to happen, let's get a November soybean chart built. So here's a daily chart of November soybeans, and you can see that they put in a big rally in the spring, and then ever since the midsummer, when all the when the plants were mature, so there was no longer a danger of drought or whatnot, and the harvest was pretty much set, you can see the market's been in a slow decline ever since. And you can see that the bars on the way down are always bigger than the bars on the way up. Here too, a whole week and a half of nothing but falling prices. A little bit of a support coming in. Of course, when they get back down here to this 880 area-ish, what's the low there? Yeah, 880. We'll see some sort of support because that's where the market held up several times. So if you wanted to sell some call options in beans, probably a pretty safe bet that they're not going to rally. I wish I could say the same for the NASDAQ. We're kind of right here on the tipping point. Come on. Well, while we're waiting for them to chop back and forth, I think we may button up the room a few minutes early here. If anybody has any questions, please ask, because this is getting to be almost a little bit too painful. Otherwise, I think we'll call it a day. The challenge with this trade will be to get this market below 48.08. Looks like we're going to keep making runs at it. You could just look to take profit next time it comes down here. In fact, I may raise my break even up a little bit to 48.07. Well, I can't raise it there because I'll get stopped for sure. All right, maybe we'll get one more chance here. We'll leave it alone. Come on. Come on. That's what we're looking at now. Trying to break this trend line. Oh my gosh. It's a sideways market. All right, well, no questions. Let's call it a day, folks. I will see you again on Tuesday morning. Hope you have a wonderful long weekend. We'll talk to you then. Bye for now.